Good evening, good morning, everybody. Jack Gleason with Startuptrading.com. It is Friday, June 26th, last Friday of the month here. In the overnight session, we had ECB President Lagarde speaking this morning. Core price index, which was increased by 0.1%, and then personal spending was at 8.2%. So a little bit of a miss there. Personal income down minus 4.2%. And then at 10 a.m., we're going to have University of Michigan consumer sentiment and inflation expectations. Let's take a look as well at what next week's news events will be, the major ones at least. GDP for the Canadian dollar on Tuesday. Powell will be testifying. The ADP non-farm numbers on Wednesday. And then our non-farm employment change will be on Thursday, as well as the unemployment rate. So it was at 13%. That's going to be a big mover next Thursday, something to keep in mind. That's basically our biggest news event for the week. I'm going to start off here with the S&P 500, talk about we're at a pretty important support zone, or I should say resistance zone for the S&P. Now, I'm going to go out to the daily and show you guys this interesting consolidation phase that I think we're going to be in for a little bit. So we have on the lower end of our range some support levels here. Now I was looking at the 3,000 level, which is a 38% retracement from the high of March 27th, the high, and we are right at this halfway back short that is technically broken. Now what's interesting about this 50% retracement short, although we've pierced that 61, right, that 61's at like 31.13. Look at all of these daily closes. There was sellers above that 61 on the 16th, the 17th, the 18th, the 19th. We closed there on the 22nd, one again and again and again. So 1, 2, 3, 4, 5, 6, 7 days we were rejected all above that 61. And then we really began making a new low, what was that, on Wednesday. Now, that old 50% retracement is this 3077 level. Okay, and then if you take what is just the halfway back from the range to low, that lines up right at that level, 3080. Those are highs. So we've had some pretty good reactions to this general zone. Everything below this 3080, 3077, I think bears are going to be in control. This is the bulls' day to lose. If they lose this support level, which I put in the laser setups last night, which was all that was our next halfway back measured move, and we did get a decent bounce off that 3053 level. Yesterday there was this 50% retracement. It was sloppy, and then it completed. Our highs were the negative 61 as well. If we lose this 3046 here, whether it be this morning or later on the day, I would begin looking at the full 50% retracement short from highs. But what I'm expecting going into today is for the bulls to have a very hard time to get above this 3080 level and this 3077. So that top side of the range, I would think, is going to be fairly difficult to break through. If we do, our upside target would be a 3095. But things, if we can get back into yesterday's value area and then start cruising below, these downside targets might be coming into play next week, especially with the non-farm payroll number on Thursday. So that's something to keep in mind. The halfway back, the downside target is 2969, and then actually right below that 2969, and that will come into play later on, is going to be this previous high, this daily previous high from April 29th in the bottom of our range that traded on the 15th. So I think it's more than likely that we do end up retesting these levels before we significantly trade higher, whether we continue through them. But that's like the next daily support I'm looking at. So going into the day, we right now are in a range between 3053 and the 3070 to 3080 level. Everything in between here is, I'd be really cautious about trading because it's not the continuation. So pay attention to those levels for the S&P 500. If we start losing 3046, and I know Perry had mentioned this earlier in his video, that once COVID got problematic, or that people began worried. It was the Fridays that were really seeing the selling pressure, and here we are on Friday with the potential selling pressure, especially if we start skidding back below 30.53. Moving on to the Dow, we are in a similar situation where we have this full 50% retracement. Now, I'm looking at the highs of the week, Tuesday to the Thursday low, and our 50% retracement is this 25,649. The bottom of the range is the halfway back long, and we've tagged that to the tick. So there is the 25,649 support and the 25,649 resistance, 25,338 support, and we are going to be in a range below that level and above this level. Now, the downside target, if we do get back below those support zones, is going to be 24,698. But expect a range between the halfway back long and the halfway back short here for the day. Moving on to the Nasdaq, which is the most bullish of the markets as always. What's interesting is the Nasdaq has this extension from 96.23 half to high. Yesterday we did not break the extension long. We came very close. There was an extension short that completed on the low, and then we actually broke the next measured move and set up in a long series. Now, this 50% retracement short, I don't even want to have drawn up, but because we broke the extension series, the long from lows, if we are going to get a more aggressive bid, if the market does decide to come in and just hold its water, continue higher, this Nasdaq untested halfway back long is 10,003 and lines up with the leg start in the breakout zone from yesterday. So that's a very important level here for the Nasdaq to hold, this 10,003. If we do see selling pressure and hold below this 10,003, even though I do think we'll bounce on the first test, but if we come down, push through a second test, me and Perry are looking at the same level below. Might not happen till next week. But that's all the way down here. This 98.35. 98.35 to 98.43 is kind of that zone I have up. It's about 10 points wide. But that's where I would expect the higher time frame support to come into the Nasdaq. And that is going to be the 50% retracement from June 15th. Okay, so I'm actually just going to bring this over a couple days. And we can begin looking for the possibility of that to trade. All right. Moving on now to oil. Oil had a laser setup short at our 39.36. Now, I believe the high in the overnight session was 39. Actually, it was 39.36. The exact high is the full 50% retracement from what is Tuesday's high to the low. Now, we can confirm this downside target by breaking the short sequence or the long sequence. We need to get below 37.95, and then our downside target here, and this is quite a big draw, brings us to 36.03. This 36.03 is just as important of a support level as the 39.36 is a resistance level. That is a same anchor new high, 38% retracement. So this downside target is also a previous resistance level, so it's now a support level because we are above. So 36.03 and 34.19 are the two support levels I am expecting to trade that are pretty significant over the coming days. Now, if you look at this, is once we tested that high, that 50% retracement, there was a really clean rejection. We had a 50% retracement short. We are red on the 5 minutes. So actually going into the morning, we have a valid extension at 38.50. So this is on the smaller time frame. There's a valid extension short at 38.50, and that would continue us straight down into the 37.97. So we're going to be bearish below this 38.60s in the morning, and as long as we can stay below these levels, we will continue to just move straight down into the bottom of the range. Otherwise, I'd be a little concerned. There is the possibility of a full halfway back short here. Okay, that's a 38.74. So these are just micro levels. I do consider to be oil to be a really good market to actually look for like day trading. So we have the full 50% retracement short at 38.74, and then the 38.50 is just the extension. So those are going to be the two smaller time frame resistance levels going into the beginning of the day here for oil. USD JPY, yesterday we had this extension, okay, and it was from the high of 106.63 to high. That extension traded, ran all the way through targets. We had a same anchor new high that was actually trading. It was on its 38% retracement all day long. It was a 107.13. We traded, we bounced. We only bounced about 10 pips, and then in the overnight session, the 50% retracement was the 107.03 that came into play at the European session. We traded the 107.03, rallied 10 pips, but then we rotated back down into what was the full 50% retracement long from lows. So Tuesday's low too high, and it was actually front run by a perfect 4 pips. Front run by a perfect 4 pips. We immediately took out the swing high, the prior swing high, that 106.95, and we held this next measured move. So these sequences out of this low, just because this is we were bid in a 4 pip front run off of a daily halfway back long. The 106.98 is your next micro measured move, and that has an upside target. It's kind of small, but these are entries into what is a higher time frame profit target, and that is all the way up at 107.77, and even a retest at this point in time of the 106.75 because it was front run on a first test of perfect front run of 4. I would consider that to be a pretty significant and valid support level at the 106.75 for the USD JPY. Moving on to the Aussie dollar, which is inside of this extension from 69.22, the anchor to low. Now we traded the 38, we made a new low, we traded the 50, we came back to the bottom of the range, we stuck the 61.8, and I think there was some Aussie dollar news last night. That's where this big candle, but we're inside of this range. So I'm just going to draw this little trend line here from the swing low of Thursday to this swing low here of Friday. We're very close to breaking through this trend line. As soon as we do, I would think that you could begin looking for the halfway back series to lead us down into the 68.32. So if we can break this trend line, this is basically equivalent to a bear flag. If we can break through the bear flag, you can look for a more aggressive entry. But right now, we're just in a consolidation with the resistance level at 68.86, and the downside target is 68.32. All right, moving on to the euro. Now, yesterday there was this extension at the 112.29s. We traded it, we came off, we traded it, we came off, we rallied to the 61, and it's really just in this tight consolidation. I'm going to remove that draw for now just because it technically did pierce the 61.8. And what I want to pay attention to is the 50% retracement from Wednesday morning high at the 113.10 to low. It's a 112.50. This was in the morning trade plan yesterday. So if we can get up to that 112.50, that would be a nice clean first test. We'd be taking out some highs. So that's the only thing I'm looking for right now. If we do make a new low and we complete the extension target, we can then just look at that same anchor new low. There is, resistance and selling pressure on that 112.29s, but at this point in time, it's like the 6th test. So I'd rather just, let it play out and see what the market wants to do as opposed to taking a brand new position on a 6th test. Moving on to the pound, which is rotating lower here, we had a 50% retracement for the day, complete its profit target. I'm still going to look at just a halfway back short for the day. It's a 124.01. That's about the only thing I'm interested in, but we do have higher time frame downside targets at the 122.51s. The 122.51s. Just to be aware, on the daily chart, I think we're most likely making our way into at least the full 50% retracement from the swing low of the year, which goes back to March 23rd to high, and that would be a retest of the lows we saw in May. It's down near 121.11s. So you can see we're stair stepping down here. Daily halfway back short to target. This is the second daily halfway back short. Sellers continue to come in. Higher time frame targets here. This 122.51 is going to line up with this leg start. So if we can move down into this zone here, you can see there was a leg start short and then a leg start long. So this zone right here you can expect us to bounce, but that zone is pretty far away. It's about 120 pips below where we are currently trading. Moving on to the USD CAD, which is trying to break out. Take a look at this daily chart. We are inside of a consolidation, and we have broken out of the highs of that consolidation. We have a pretty strong bar right here, but once we can clear these current highs, we can begin running all the way up into the 137.73 here. So very interesting just setup and chart here for the USD CAD. There's actually this 50% retracement that was from the swing lows of the morning on Wednesday to high. That is where I'm getting my most recent target. That would be a target right into the high, the 136.93. At this point in time, I'd love to see that 136.93 complete and then look for our next measured move. We are right at the breakout. If this is looking strong during the day, if the USD CAD is looking strong during the day, you can go to the smaller time frame and try to look for an entry. We have green on the 5-minute right here, so there is micros. If you're interested in trading them, you do have a next micro, but if we continue to go straight up off the open, we are going to get a daily breakout in the USD CAD, and there are higher time frame upside profit targets there. Moving on to gold, which is just boring at this point in time. Nothing's really changed. We have support levels below 1751 and 1734. Those are the higher time frame supports if we can get a breakdown. We are sitting on and have been sold into the full 50% retracement short from the highs of the week, which occurred on Wednesday. And unless we break above 1784s, we can't confirm the 1764 support. So we have just one bottom, 2, 3, 4. This is the fifth, okay? As long as we are below these levels, if we start taking out the highs of the day and reversing back above 1776, I would say there's a possibility of just a smaller time frame run up into the 1787 level. But right now, there isn't much to do. If we crack 64s, downside targets are going to be 56s. We're stuck in the middle of the range. You can try to trade the micro breakout of the range when it does happen. But other than that, I really wouldn't touch this market right here. Silver futures rollover, which is going to give us a nice setup here. The setup would be, first of all, we have a gap fill from the futures rollover. We're now in the September contract, the SI. We've gone all the way back to the top of the range that we just tagged it. That's a 4-hour swing mark higher. The halfway back long from the lows of Wednesday to high is going to be a 1781, and that would be a pretty decent level of support. But right now, that's the only thing that I'd be looking for in silver. All right. But yeah, that's going to wrap up my morning trade plan. If you guys enjoy this content, feel free to give this video a thumbs up. If you're not subscribed to the YouTube channel, subscribe, because I just realized we got 998 subscribers. So I need 2 more subscribers here today. If you're not already subscribed, to break 1,000, big milestone for me. So appreciate it, guys. Everybody have a wonderful weekend. And I'll catch you guys in my trade room here this morning and share my levels with every single one of you members. Let's trade safe and have a great end of the week. Take care. Channel subscribe, because I just realized we got 998 subscribers, so I need 2 more subscribers here today. If you're not already subscribed, break 1,000, big milestone for me. So appreciate it, guys. Everybody have a wonderful weekend. Catch you guys in my trade room here this morning and share my levels with every single one of you members. Let's trade safe.